Welcome back everybody. In this video, I'm going to show you how I made over 20% profit across two personal trading accounts. And if you stick around to the end of the video, I'm going to show you the MyFX book proof to go along with it. Now let's start things off by going over each individual trade on TradingView. We're going to kick things off with USDJPY on the 4-hour time frame. This was my only swing trade this week and it hit full take profit, which is very nice. A ton of my community members also got involved with this trade, which is so amazing to see. I'm going to briefly skim over this one because I've talked about it in previous content. But basically the premise here was a bearish continuation trade to the downside based on this range right here. So as you can see, my fib tool is drawn from this high down to this low. To be a little bit more accurate, it could have done the fib range from this high right here, but my indicator plotted it like this just to be a little bit safer, I guess. I was perfectly happy with that though, because I like my Fibonacci numbers to land on the imbalance. So any lower and it wouldn't have actually done that, which means there's a high likelihood of price going into drawdown. Now, thankfully here, there was very minimal drawdown. As you can see, those two wicks went slightly past my entry, but then very shortly afterwards melted to the downside, creating a lot of bearish momentum and pushing my trade significantly into profit. Now, near the bottom of this newly created bearish range, we can see some consolidation, which definitely wasn't fun to hold after being this close to my take profit, but I trust my system, I trust my trade, so I just let it do its thing. Didn't move to break even, didn't take partial profits. I was confident that the take profit would be hit eventually, and here it was. Now, the rest of the watch list was 15-minute day trades. Well, I call them day trades, but sometimes they last longer than a day, but it's basically my lower time frame style of trading. So as many of you should know by now after watching my channel for quite some time, I utilize two different styles of my strategy. There's the swing trading strategy, which utilizes the daily time frame and the 4-hour time frame in combination with each other. And then I have a lower time frame style, which uses the 4-hour time frame and the 15-minute time frame together. This makes for more trading opportunities and shorter trade duration. So this is an example of that style of trading, which I've taught on this channel for free. On the 15-minute time frame, this is a simple bullish continuation trade. You can see the structure back here that I was initially targeting, and it's basically a swing low right here, a swing high here, and a nice imbalance in between that lands beautifully on my Fibonacci numbers. Now, don't be alarmed by the fact that I have more than one Fibonacci number here. I'm just simply testing between the two. I typically enter at the 71%. I have entered at the 75% a lot in the past, mostly last year, but I was finding that I was missing a lot of opportunities. Even though the risk to reward was better, I was missing too many trades. But market conditions change year after year, so it's good to continuously test things like this. So I'm simply testing it right now to see how many times both levels get met. For the 4-hour and 15-minute trading style, I'm entering at the 75%, and that gives me a consistent risk to reward ratio of 1 to 3. So with this trade in particular, we can see that I was activated in my order right here, but then price consolidated sideways for way too long, which was frustrating to see, but eventually we skyrocketed to the upside, taking out my full take profit right here. No partial profits, no silly nonsense like that, just right to take profit. Next up, we have GBP Swiss franc. I took 2 trades on this pair this week. I took 1 loss and 1 win. So let me explain the loss first. And it was based on this range right here. As you can see, it was a simple bearish continuation trade, entered at the 75%, which just barely landed on the imbalance. On TradingView, it doesn't show, but with my broker, it was just in that imbalance there. So valid trade for me. My stop loss was placed at the high, take profit was placed at the low. There was a pretty decent reaction right off the bat, going into about 1 hour of profit, but then price abruptly reversed and took me out for a full stop loss at this high right here. So unfortunate, but that's just part of the game. Trading is all about probabilities. We have to execute the same trades over and over and over again. Some will be losses, some will be wins. However, my wins are much bigger than my losses, and combine that with the fact that I have a very healthy win rate, it is overall a very profitable strategy with longevity. So this loss here doesn't bother me at all. It's part of the plan. If I were to go back in time, I would take this trade again because it fits my trading plan. Now, moving forward, you can see obviously I took another trade after that and actually switched my bias. So let me hide that position tool for a moment so we can focus on the new Fibonacci range that was created. So as you can see, price was very bullish after taking me out at my stop loss of the first trade. And so this range right here stood out to me quite a bit. There's imbalance right in the middle, which lands beautifully on both of these Fibonacci numbers, the 71 and the 75%. So naturally, I went long from this region here at the 75% retracement. Stop loss was placed at this low, take profit was placed at this high. Now, this one was a lot smoother. There was an initial reaction, and then it went back to entry, slightly in drawdown, and then shot up much higher and much more aggressively, taking out my full take profit at this high. So obviously with having a risk to reward ratio of 1 to 3, that winning trade makes up for the losing trade and I net to our profit. Now for all of these trades that I'm showing today, I risked 2% per trade. So this 1 to 3 trade actually represents a 6% profit on my account. Now, minus the 2% loss, obviously that is a net profit of 4%, which is phenomenal. So that's about it for GBP Swiss franc. Just very simple continuation trades on the 15-minute time frame, with of course using the 4-hour time frame as an additional confluence to understand the higher time frame direction. Unfortunately had one loss, but then quickly made up for it with a very healthy win. So let's move on to GBP CAD. GBP CAD was another continuation trade very similar to GBP USD. As you can see, we have a bullish range right here, just a continuation trade to the upside. Previous price was very bullish, so just a continuation trade to hopefully ride along with that trend. Now let's analyze the range itself, because this is very, very important. So many people get confused with this. It's not like I'm throwing a Fibonacci tool on every single range that I see. It has to present this criteria. There's an imbalance here that lands beautifully on both of my levels that I'm interested in entering at. So again, entered from the 75%, as you can see here. There was significant drawdown with this one. It's not fun to see, but it is what it is. Price activated my order right around here. And then after messing around for a bit, going up and down, we saw a huge spike to the downside that just about took me out. Let me quickly measure that. From the low of that wick to where my stop loss is placed, that's 5 pips. So pretty tight. I was 5 pips away from my stop loss on this trade. But thankfully, that was just a whipsaw effect, and price went all the way back up, came back down again, close to that region, and then went very bullish. As you can see, full bullish candle bodies here. No indecision really, no bearish candles, just straight to take profit. Obviously, I wish that it skipped all of this nonsense and just did this from the beginning, but that's not how the markets work. The markets are imperfect. We can't expect them to be as clean as we want them to be. Not everything is a textbook beautiful trade, but we still have to execute those trades regardless of how they look. As long as it fits the criteria, we need to execute those trades. Now, last but not least, let's discuss gold. So I'm starting off with gold on the 4-hour time frame, and there's a reason for that. Obviously, price has been bullish for a very long time. It's kind of hard to bet against gold right now, given the current geopolitical situations, I assume. Now, zooming in a little closer, keep in mind we're on the 4-hour time frame. This overall swing position here is something that I was waiting for a while. I actually had an order set on my 71% level back here, and unfortunately, my broker did not tag me in. It shows that it was activated on TradingView. Let me just zoom in a little closer here. It shows that it was activated on TradingView. The wick surpassed the 71% by quite a bit, but my broker did not tag me into this order. So I ended up deleting the pending order as price continued to take off to the upside, which was a little heartbreaking, a little more heartbreaking now that I see the end result, of course, but it is what it is. It's the nature of the game. Now, gold is a little crazy. It's a very finicky asset to trade. As you can see, price went so close to the intended take profit, which was just at this high here. We were just a few points away from that take profit right here. And then gold absolutely fell off a cliff for no apparent reason. And I say no apparent reason because it just quickly reversed after that and went to the intended take profit. So this is like a liquidity shakeout, you know, and it does this quite often, tricks people into thinking into selling opportunity. It creates a lot of panic and uncertainty, and then it continues in its intended direction anyways. So again, very finicky asset. Trading gold is not for the lighthearted and certainly not suitable for beginners. But there were many people in my community who caught this swing trade as well. Unfortunately, I was not activated, as I mentioned, but it's nice to see community members also getting involved in this. Now let's discuss where I actually got involved, which is right up here. And it is a 15-minute entry. So let's go down to the 15-minute time frame and rearrange our chart here. So this, I have a few things to talk about here, some of which may surprise you. Let's first focus on the initial setup, which is of course the Fibonacci range printed at this low to this high right here. This is the overall range that I was looking at. Obviously there's some inherent risk here because we just took out the previous highs back here, as we just discussed from the 4-hour perspective. Like I said, it's kind of hard to bet against gold right now. It is just continuing bullish and bullish and bullish week after week. So I ended up going long from this entry point here at the 75%, which landed very nicely on this imbalance. Remember what I said before, everybody. I don't enter these trades unless it's on the imbalance. So having that little gap in price there is extremely important to my strategy. That is the potential reaction point that I'm waiting for in price. So now let's look at the price action of the trade itself a little bit closer. As you can see, the order was activated right here. Fairly minimal drawdown, can't be too upset about that. It looks pretty good. A pretty abrupt move to the upside right off the bat, and price consolidated for a bit sideways, continued even higher. And then in Asian session, I believe it was yesterday, we saw a huge sell-off that went all the way back to my entry point. Now, eventually, after moving sideways for a bit longer, it took out what would have been my stop loss, the original stop loss here. Now, I say what would have been my stop loss because, drum roll, I actually went break even on this trade at 1 to 2 risk to reward ratio. Now, for those of you who have watched my channel for a while, that's going to sound crazy. You're going to think, oh, he's changing up his rules. What's he doing? I'm testing a break-even protocol at 1 to 2 risk-to-reward ratio only for the 4-hour and 15-minute trades. So not my 4-hour swing trades. I like to just let those do their thing. Maybe I'll change my mind in the future. I have no idea. I try not to stay married to things too much. But for the 15-minute executions, I'm testing a 1 to 2 risk-to-reward ratio break-even protocol, as well as, like I mentioned, testing the 75% entry instead of the 71% entry, which is a very minimal difference, but it makes a bit of a difference in the risk to reward ratio. So it's just something I'm collecting data on. And again, collecting data on the break-even protocol as well. In the past, I've experimented with going to break even at 1 to 1. That yielded horrendous results, just terrible. It's just so many missed opportunities because it goes to break even and then goes straight to your take profit. I thought that was horrible. I've never really tested in depth at 1 to 2 break even. So that's what I'm doing now. Doesn't mean that it's set in stone, but it's just something that I'd like to collect more data on. Now, with that being said, before I head over to MyFXBook, I wanted to mention all 5 of these pairs and every trade that I just talked about was actually taken on both of these accounts hands-free. For the better part of a year now, the goal with Currency Pros, the goal with my strategy has been to automate it. Now, within the past few months, that has actually become a reality. We currently have a MetaTrader 5 expert advisor that has been meticulously coded to our exact trading strategy. And every trade, like I said, every trade that I went over today, all of these, where there was 4 winners and 1 loser, yielding a net profit of over 20% on 2 personal accounts, was all taken hands-free by this expert advisor that has been coded to our strategy. As well as the break-even protocol, there's settings in the EA for that. So it was all done automatically. Now, I've debated even talking about this, to be quite honest, because expert advisors and these types of automated things have such a horrible reputation on the internet. And I completely understand that because the majority of expert advisors and other trading bots utilize strategies like martingale or some sort of grid system or some sort of dollar cost averaging trending trade system. And that is not this. Like literally everything I've ever taught on this channel has been coded into this EA. So it does everything for me. And this has been my goal, honestly, since I started trading. I knew that if I had a mechanical system, it could eventually be automated. I just didn't know how quickly that could actually become reality. I also didn't have full confidence in the fact that that could be done until I met a developer that I've been working with, who is just such a skilled trader on his own and utilizes our strategy. He's actually a community member and is just so skilled and talented that he made this dream become a reality. And the beauty of MetaTrader expert advisors is that you can do automated back testing as well. So instead of going to FX Replay or TradeZella or one of those platforms to do manual back testing and collect data, you can click a few buttons and run 10, 15, 20 years of data within minutes. And based on that data, I can confidently say this is extremely profitable. I'm not going to reveal too many numbers just yet, but I have butterflies in my stomach just talking about it. So I'm not going to discuss this too much today. I just wanted to briefly mention it because I cannot lie about these trades. I can't say that I took these trades. This was all automated. It is the exact strategy that I teach on this channel, but I can't fool you guys into saying, yeah, I found all of these trades, I took all of these trades. No, my strategy has been automated fully into a hands-free MetaTrader 5 expert advisor, and it found each and every one of these opportunities for me, and the net result in just 1 week was over 20% profit, and that is risking 2% per trade with a 1 to 3 risk-to-reward ratio. Now that I've cleared all of that up, I want to head over to MyFXBook. I have 2 separate MyFXBook portfolios for each of these accounts because they are 2 completely different styles of trading, one higher time frame, one lower time frame. So I wanted to separate them like that. So without further ado, let's dive into that and break down each individual trade there. Okay, here's the first MyFXBook account. This is the swing trading account. Let's dive into the actual trade results. I started this account back in October. It shows September, but that's just when the deposits were made of $5,000 each, back to back, so $10,000. And trading began in October. Now, there was a lot of manual trading here, some good, some not so good, but just recently I switched this account over to fully automated. So now I'm not manually executing trades here. It's literally the expert advisor that I was just talking about, the exact same strategy, but I no longer have to look for the trades or manage them. So the overall gain since the beginning of October when trading began is just over 13%. This was much higher. This was well over 20%, but I incurred a bit of a losing streak. So let's scroll down to that and I'll discuss it a little more. Feel free to pause the video at any time if you want to study these statistics a little bit more, but let's continue scrolling down to the trade history, which is probably the most important. So as you can see, this is the most recent trade here, USD JPY, the swing trade that I was discussing. I hit TP for over 350 pips, and that netted a 5.53% gain, because again, I'm risking 2% on each of these trades. Now, if you look at the history just prior to that, I took, unfortunately, 5 losses in a row, which really sucked. But again, only 2% risk. It's a fixed risk per trade. So I know how much I'm going to lose. I know that my losing streaks don't last forever. 6 trades is definitely not ideal. That's a bit more than usual for me. But January was rough, to be honest. I just wasn't reading price correctly in January, but I'm willing to take that on the chin. That's totally fine. Now, prior to that, there was a couple wins, a loss, a couple more wins, another loss. When I started this account, there was 4 losses in a row. I think that was just pure psychology of going public with this. But I made up for that very quickly anyway, so it's no big deal. So scrolling down a little bit more, you can see the recent monthly history. In January, I lost 3.42%. And in February so far, I've gained 3.57%. That is because the 2 trades in February were the loss on GBP NZD right up here, and then the win on USD JPY. Obviously, the net difference between there is 3.57%. So that's what I've netted for this month so far. You can see the deposits here as well, 5,000 each. Now, before you guys jump to conclusions, I'm not affiliated with Blueberry Markets in any sort of way. I'm not going to give you an affiliate link for them. I don't care if you sign up for them or not. It makes no difference to me. Again, I have no affiliation with them. So that about sums up the swing trading account. Again, this is now fully automated. So the first trade that has been automated on this account is this USD JPY trade. I did not manually execute this trade. My expert advisor coded to my strategy, did this for me. Everything you see prior was manual. Unfortunately, there was 2 losing streaks within this account, but still obviously a net positive. Scrolling back up, plus 13%, that's not too bad. Obviously, that's not like passing a challenge every single month, but that's not realistic anyways. Just over 13% is not ideal for, 4 months of trading progress. But there was 2 losing streaks. I'm very confident that this is going to get into much higher numbers very, very soon. Now, moving on to the newly created account. This is the 4-hour and 15-minute account. Now, let me clarify something as well. These 2 accounts were started fresh so that there's completely fresh history with both. The reason for that is because I wanted to deposit a reasonable amount of money, $10,000 per account. You can see the $10,000 deposit here. If I go back to the other account, there was an initial deposit of $10,000 here as well. That was because I feel that that is a valid and realistic starting point for the majority of traders. Even if you don't have $10,000 of real capital yourself, pretty much anybody on this planet can afford a $10,000 prop firm account. So it's a very realistic starting point, and I wanted to showcase how to grow and also how to compound an account of this size over time. So aside from taking the trades and obviously compounding the profit like that, I'm also going to be making semi-regular deposits into this account to further grow that balance. I want each of these accounts to be at 100K in the very near future. First of all, so they are of interest to me, because these dollar amounts don't really do much for me. The profit per trade is not significant to me at all. So I'd like them to be bigger so I care more about them. But more importantly, I want to have all of that data so we can discuss it together and really analyze the results as a community. One more thing I'd like to mention about these MyFXBook accounts before I get into the history of this 4-hour and 15-minute style is that both of these accounts are set to live update. So they are both verified accounts by MyFXBook, and the live update function is somewhat new with MyFXBook. There's different ways you can connect an account when you sign up for one of these profiles, and all the previous options had quite a bit of delay, which would allow people to manipulate results if they had access to their broker or if they owned their broker, which many trading influencers in the space do nowadays. But the live update feature shows real-time movements. So every tick is updated in real time, and you can watch the trade progress. You can see the stop loss, you can see the take profit, and you can watch the trade move as price develops. So with that clarification out of the way, let's discuss the results on this account. Now, this one is performing phenomenally so far. This is literally just 1 week and it's just under 16%. So that is fantastic. Again, risking 2% per trade. The leverage is at 1 to 200, which is pretty reasonable. Now let me scroll down and discuss the trade history. So again, feel free to pause it at any point in time if you want to spend more time looking at these stats, but let's scroll down to the trade history, which you can see here. So these are all the trades that I just discussed on TradingView. We have GBP Swiss franc loss, a GBP USD win, a GBP Swiss franc win, a GBP CAD win, and then a gold break-even trade. you can see the net gain right here on the right hand side, and you can actually see the trade duration for each one of those trades. They could all pretty much be classified as day trades except for GBP USD, which lasted 2 days. So I like to think of my 4-hour and 15-minute style of trading more as a hybrid strategy rather than a day trading strategy, because sometimes this can happen, but I don't mind. I don't pay attention to sessions, but for the most part, these style of trades are closed within a day. And you can see the deposit here as well. These weren't even numbers because they were from crypto wallets. The other account was directly from my bank account, which is why they were in 5K increments, because I have sending limits per day. But this was from a crypto wallet, 2 different ones actually. So that's why they're kind of random numbers here. I just wanted to make it 10K. It was slightly over 10K. If I go back up here, 10,025.52. Anyways, those are the trades that I discussed on TradingView. As you can see, for the month of February, we're up 15.84%, which is fantastic. So I look forward to keeping you all updated on this. Again, the reason I started this account fresh is because I wanted to hook it up to the expert advisor I was just talking about. I wanted to deposit realistic funds here, just 10K, which everybody should be able to relate to. And I look forward to growing this account over time, especially with the help of this expert advisor. Now, before you ask in the comments down below, no, it is not available. Okay, so don't bother asking. If anything changes, I will update you guys, but it's not available. I'm just in testing phases with it right now, and it's looking very promising. And to be quite honest, I think it trades better than me. So I'm extremely excited about it. I'll definitely keep you guys updated in content. But for now, that's all I have to talk about. I really hope you guys enjoyed this little weekly recap. If you did, please leave a comment down below and let me know if you'd like to see more of this style of content. And if you haven't already, please consider subscribing to my channel. I post content like this regularly. There is so much educational value on this content, absolutely for free. It would be crazy not to subscribe. Thank you all so much for watching, and I'll talk to you all soon.